Wednesday, December 15th, 2021, Monaco 64, home of alternative economics and contrarian views. So Billy and I have been for a walk this morning. Many times when I'm out and about walking the dog or doing something else, I'm thinking. And sometimes that's where I get my ideas for what to talk about to you. And this morning I was pretty upset and kind of angry about what's going on in the world. And I thought to myself, yes, the globalists are using fear and force to control us. I mean, it's very clear for everyone to see. You want to call the globalists the Davos men, you can. I think they're all one and the same. That's the central bankers, the people who control the big corporations, the big banks, the big think tanks. Yes. And then we came back, and just before I started, I thought to myself, that's actually a good sign. The fact that they're using so much fear, and now they're trying to force people to do things. Again, here in the UK especially. Yes, it's a sign that they're on their last legs, that the system is almost imploding. And by the system, I mean the whole societal system of economy, finance, politics. I think that's where we are. And the reason why we're there is all got to do with the money, with the monetary system, of course, which we don't have anymore. We haven't had a true monetary system for many, many decades. Here in the UK, I would argue for over 100 years, since the outbreak of World War I, in which they had to renege on convertibility of banknotes, really, into real money, i.e. gold. Because if they hadn't done that, they wouldn't have been able to fight that war for as long as they did. In other countries, you have different time scales. In the US, of course, you've got 1933, where the gold standard ended domestically. And then you've got 1971, when Nixon ripped the agreement for gold convertibility internationally. So yeah, that's where I think we are. And yes, it can be scary, frustrating, and worrying, but I can't tell you how long to go there is for things to implode. The other side of it is going to be an unknown, and I don't think it can be any worse than it is right now. And unfortunately, a lot of people are succumbing to the force and to the fear. And I agree that it's hard not to sometimes, especially for people who haven't been awake or aware of what's going on. But be as it may, I think trying to stay sane, trying to keep your mind clear, because the word government, actually, if you strip it apart, means to govern your mind. Don't let them govern your mind. Don't let them also force you into do things you shouldn't, like monetary wise, I would say. It is frustrating what's happening to the fiat price of gold and silver, especially with what we saw yesterday, PPI almost at 10%, and gold and silver get hammered. And it doesn't make sense. But a lot of the stuff that we're being told as well, in terms of health and all the measures that they're bringing in, doesn't make any sense as well. There's no more listening to common sense or good arguments. People ignore it, and it's the same thing for the economy, for markets, for gold and silver, for investments, and you might say, well, you are a masochist, or no, I'm not. I'm just holding on to what's, in my view, the right thing to do. Yes, what is true as well. So just before I reference this book again, Fiat Money, Inflation in France, and why I think we're in the last stages of this crisis. It's like fiat money inflation in the West, I would say. And it's been going on since, I would say, 2008. Just, you can see maybe that Billy had his haircut yesterday. Well, the lady that does Billy's grooming, she used to have a shop nearby years ago. Now she's running a mobile grooming business. She's got two vans, grooming vans now. She's growing. She's doing really well. Her husband is helping her out. So it's a family business. And when I paid yesterday, they told me, well, next year it's going to go up 10%. They told me the price. And yeah, it's just over 10%. And I said, well, I'm not surprised with all the prices going up. And they said, yes, it's costing us a lot more to run the business. So they said, unfortunately, we're going to have to raise the prices. And I don't have a problem with it. Fortunately, my wife and I are in a position where we can afford to take the higher price for grooming Billy. They come every 8 weeks. So there you go. Billy got a nice Christmas bow. It's like green with gold stars, which is really nice. Anyway, so yeah, let's reference here what I think has been happening. Not to France this time, but you could say fiat money inflation in the West. And finally, as to the general development of the theory and practice which all this history records, my subject has been fiat money in France, how it came, what it brought, and how it ended. It came by seeking a remedy for a comparatively small evil in an evil infinitely more dangerous. So I would say the small evil, and you might not agree with me, was the collapse of the banks in 08. It would have been very easy to restructure. Yes, it would have been painful, especially for the bankers. It would have been painful for everyone, I would say. But it was more the Wall Street banks really that were in trouble. The smaller banks worldwide, not so much. And you saw as well how Iceland let their banks collapse and it came back. So looking back in hindsight, I think it would have been it was a small evil. And now we have a much bigger evil. It's the whole of society, right? To cure a disease temporary in its character, a corrosive poison was administered, which ate out the vitals of French prosperity. Replace that to Western prosperity or US prosperity or European prosperity altogether. It progressed according to a law in social physics, which we may call the law of accelerating issue and depreciation. It was comparatively easy to refrain from the first issue. It was exceedingly difficult to refrain from the second, to refrain from the third, and those following was practically impossible. So that's all the QE. The issue of irredeemable currency, of course. It brought, as we have seen, commerce and manufacturers, the mercantile interest, the agricultural interest to ruin. So everything, the whole economy. It brought on these the same destruction which would come to a Hollander opening the dikes of the sea to irrigate his garden in a dry summer. It ended in the complete financial, moral, and political prostration of France, the West. I think that's where we are right now. We're in the initial stages of that. A prostration from which only a Napoleon could raise it. Well, who's going to be the man on the white horse this time? I don't know. And the author says, but this history would be incomplete without a brief sequel showing how that great genius profited by all his experience. When Bonaparte took this consulship, the condition of fiscal affairs was appalling. Sounds familiar, doesn't it? The government was bankrupt, and immense debt was unpaid. Yeah, I just saw that Congress lifted the debt ceiling by $2.5 trillion, right? Just like $2.5 million for them now. It's nothing. The further collection of taxes seemed impossible. The assessments were in hopeless confusion. War was going on in the East, on the Rhine and in Italy, and civil war in La Vendée. All the armies had long been unpaid, and the largest loan that could for the moment be effected was for a sum hardly meeting the expenses of the government for a single day. So here's where it's key. And this is all about sound money, about gold and silver. And I don't think anything changes. This was 230 years ago, 220 years ago, and it doesn't change, in my opinion. At the first cabinet council, Bonaparte was asked what he intended to do. He replied, and I quote, "I will pay cash or pay nothing." From this time, he conducted all his operations on this basis. Well, by cash, he means specie, gold and silver, right? Not paper. So there you go. Yeah, that's where I think we are right now. We are, of course, in supposedly dangerous times. But I actually think the powers that be, they're scared. They're running scared. And you can't really rule with fear for that long. How long this will last, I don't know. And I'm not here to advise people how to react to this, but I have to admit, I do get angry and frustrated a lot of times. But one thing that helps me is talking to you, trying to be positive. And have faith that truth will come out. Yeah, and that's all we can do. Just hold the line. So with that, let's quickly look at where the markets are this morning. Of course, today we've got the FOMC announcement. We got the press conference. The Federal Reserve is also coming out with its forecasts and their dot plots, which I think are basically more and more propaganda. I think the markets are expecting them to double the amount of tapering that they announced in the previous meeting, which was 15 billion or 10 billion of treasuries, 5 billion of agency or mortgage-backed securities. So if they come out and say they're sticking to that 15 billion, I think that's very dovish. The markets expect them to at least double that, the tapering to 30 billion. They're not going to change rates today. I don't think anyone expects that. They expect that maybe next year. I don't think they're going to be able to accelerate that too quickly, the rate hikes, or else everything, of course, will implode. The announcement, of course, is coming out at 2 p.m. Eastern Time, U.S. Eastern Time, or 7 p.m. My time, or London time. So right now it's 10 to 9 a.m. So we've got spot gold, 1768.30. It's down about $2. Range has been 1774 to 1766.50. Silver got hammered yesterday, yes. And I had like a discussion on the comment section of yesterday's video about silver. And someone was saying, well, I think silver is going down to 15. And I said, well, even if it goes to $15, here in the UK at least, it's going to be really hard to find any silver at that corresponding price in sterling, for example, because the premiums are so high. And this individual said, well, I can get silver for 2% over spot. And I had a look at all the major bullion dealers in the UK online. And the lowest premium I found, before VAT, of course, was around 22%. If you're buying like 10 or more coin, 1 ounce coins. And then he told me about some websites that he looks at. They're actually German. One is Silver Coin Investor or Silver Coin Direct, and the other one is Silver Only, Silver to Go, and they're actually German. And I looked at them, and a lot of their coins were not available, and the ones that were, you had a 5 to 10 day waiting, and the premium was about 22%. So yes, I think it's still going to be very hard to find real physical silver. And do you avoid the VAT? You might not pay the VAT to that German company because there's no VAT in Germany. But when they ship it to you from the EU to the UK, I'm sure they have to declare that to customs, and you have to pay the VAT to customs. So I would be careful with those businesses. Not that there's anything wrong with them, but they might be right in that you don't pay the VAT to them, but you might have to pay the VAT to customs when your coins arrive in the UK. Yeah, I don't think the premiums are as low as that individual said. I mean, I had a look at the websites he told me about, and they were far from being just 2% over spot. And for some bullion dealers here, like ATS, I think, some of the premiums are like 50% for silver. So anyway, back to the paper prices, I would say. Yeah, this morning spot silver is at 21.88 here. It's down 6 cents. The high's been 22.08 and the low 21.82. Dow futures up 39 points. The NASDAQ 100 futures virtually unchanged, and the S&P futures also just up slightly. FTSE is down 20 points at 72.06. Sterling is up 1/3%, 132.77. The euro is up 0.1 at 112.70. The dollar's down slightly versus the yen at 113.69, and dollar's down slightly as well versus the yuan at 637. Aussie dollar is up almost 0.5% versus the dollar at 71.34. The dollar is unchanged versus the Canadian dollar at 128.63, and the Kiwi dollar is up about 0.2 versus the dollar at 67.56. To the commodities, WTI crude is down 0.4%, just above 70. High-grade copper is down 1.2% at 420. And U.S. natural gas is up 1.3% at 378. The 10-year yield, surprisingly, you would have thought with the PPI number yesterday that it would have risen. PPI came out at 9.6. Almost 10%, and I would say it's probably running more like 20%. That number is purely fictitious, I would say, if you look at all the natural resource market, all the commodity markets, what they've done in the last year. PPI should be more like 20 or 25, not 9.6. And you would expect the 10-year yield to have risen, but it's virtually unchanged from yesterday when I spoke to you. It's at 1.44%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.